Okay, good evening, everyone, and welcome to our Canadian tax preparation. Tonight, we are joined by recent graduates and international students from institutions all across Canada and internationally outside of Canada. My name is Han, and I will be moderating our session tonight. Just a few housekeeping items to go over with you. So, all participants have been muted. There's no need to use your video. You should be able to hear with your computer audio device. And of course, the session is recorded. There will be a end of session poll at the end, so please take some time to send your feedback at the end of the session. We also ask that you use the Q&A section, which is there at the bottom middle area of your screen to ask questions. Steve Morgan from Sprintax will be answering your questions on the back end, and will be answering your questions live, but please use this Q&A session to put in your questions. And also, the chat function won't be monitored for questions. This is usually used for perhaps you want to share some resources, share some comments, meet new people in the webinar. So you can also use this function right now to type in where you're from, what school you're graduated or taking, and we'd love to know a little bit about yourself. Everyone will also receive a copy of the Devant newsletter called Your Devant Inside. And we also ask that you visit our website, Devant.ca. There's future workshops listed under events, and there's one upcoming on April the 5th. For careers in supply chain. So please feel free to share with your networks if anybody is in supply chain area. As for myself, my name is Han again. I'll be moderating our session this evening. Before joining Devant, I worked within the nonprofit sector in settlement and employment services, helping newcomers in Canada. So the area of immigration, program development, and helping newcomers succeed is where my heart is, and so I'd be happy to help out at any time. A little bit about Devant before we get started. Academica Group has been around over 20 years. They are the largest company providing research and consulting expertise to colleges and universities in Canada. They focus on student recruitment, student success, and career development. So Academica Group started Devant because they saw the challenges that international students and recent graduates have when they're looking to establish a career in Canada. So the word Devant in French quite literally means in front of. So we believe that our services will support you and bring you in front of the rest of your journey to stay, work, and succeed in Canada. We are also an organization tailored specifically to cater to international students, and with the expertise of over 60 years of combined experience working in higher education and career development. So Devant is entirely set up to provide assistance to international students like yourself. Our panelist guest speaker today is Kelly Hare, is the Vice President of Sprintax US in Canada. He is based in New York and has been assisting universities and non-resident international students and scholars within Canadian tax withholdings for many years. He has delivered hundreds of tax workshops and webinars over the last number of years and has been featured in NPR in the US regarding non-resident taxes. The Sprintax team have helped thousands of non-residents in Canada with their taxes since 2010. And of course, when he was in his own student days and spent a summer working for the Toronto Star. So I'm going to pass over the floor to Enda. So welcome.
Thank you very much, Han. Very nice to virtually see all of you. Thanks for joining us this evening. Hopefully for the next 45 minutes or so, we'll be able to give you a good overview of what your tax filing obligations are in Canada. Even if you only arrived in Canada in the last number of months, while you mightn't have to do anything for this filing season, hopefully some of the information that we give you, you will find a little bit helpful as you go through the rest of the year and as you prepare for next year. I'd also like to thank Han and the team at Devant for inviting us to participate in this. webinar. We did it last year, and we had a good turnout from Devant customers and folks that are registered. So we were very happy to kick it off again. A quick shout out to my colleague Stephen. So as Han mentioned, he will be in the background. So hopefully a lot of the questions that you guys have, we'll actually be answering as we go through the session. But Han and I have deliberately left a little bit of time at the end so that we can answer some of the questions that come through. What we would find sometimes is somebody might ask us a question through the chat function that might be maybe a little bit personal, or maybe in order to answer it correctly, we'd need to ask a few more questions and possibly ask for some personal details, like maybe an income level, like maybe a background. So if it's the case that you ask us one of those particular types of questions, I might be able to give a more general answer, but for instance, maybe myself or my colleague Steve might ask you to give us your contact details so that we can follow up with you separately, because, you know, for instance, on a public forum like this, it's not appropriate to be asking people, you know, where they worked and how much they earned and maybe questions of that nature. But we will try and help you, but it might mean that we need to help you a little bit afterwards, after the session is ended. I think one of the things that helped last year when we did this session is I tried not to use all of the language of the Canadian Revenue Authority, and I tried not to speak like a lawyer. So what I'm going to try and do is give you sensible advice and or sensible information. Please note, however, that every single person's tax position is going to be different, and it's going to be based on you and your unique circumstances. So what I will try and do is give a general overview of the Canadian tax system and your filing obligations and some of the forms as they would apply to all non-residents, and in particular to international students. But just because I'm talking in general, don't take it that that is going to be your unique experience, because there could be something in your background, there could be something in the country that you come from, there could be something in the type of work that you did, or maybe a type of scholarship that you received that means your tax might be a little bit differently. So while I'm going to try and give you some good general information, it's very important that when you do come to actually filing both your federal and possibly your provincial tax returns, you do so very much based on your own unique circumstances. We'd nearly say, you know, every person's tax return is almost like their own DNA. We've seen too many times where people, maybe they're at the same university, they come from the same town back home, they're possibly even on the same visa, but there's something weird or wacky in one of their backgrounds that means one person is treated this way for tax and another person is treated slightly differently. So again, while I'm going to try and give good, helpful, sensible information, please make sure when it comes to doing your tax return that you base it on your own unique circumstances and not something that you might have heard from one of your friends or colleagues. So if we kind of jump straight into it then, Han, the first thing that we need to establish is a TD1. So I'm not sure have any of you actually heard of a TD1? I guess if you worked at some stage in Canada last year, I certainly hope that you heard about a TD1. If you want to transition to the next slide, Han, I'll go into a little bit of the details of it. So when you think about it, if you're starting work in Canada, your new employer needs to figure out who you are, where you're from, so that they can tax you correctly. And they don't just do this if you're a non-resident. They do this for absolutely everyone that would join their company as a new employee, because the objective of the employer and also the objective of the Canadian Revenue Authority is that they collect the correct amount of tax dollars at the right time. The Canadian Revenue Authority would absolutely love it if everyone had a zero balance tax return, because that would mean that the correct amount of tax was taken from your wages or your gains or your stipend or your scholarship at the correct time, meaning that there was no delay in getting the money to the Canadian Revenue Authority, but also that the Canadian Authority didn't get too much money. Because what we would see every year, and it's not just in Canada, but thousands and thousands of people end up due a tax refund from the Canadian Tax Authority. And that's because somewhere in the paperwork of either getting set up as an employee or while they were taxed as an employee, too much tax was taken out of them. So one of the key forms in terms of making sure that things do get off to the right start is the TD1. And it's basically your personal tax credit return. And what it does is it identifies you to the your new employer. It's got all of your profile details, it's got your Canadian tax ID, it's got your address, etc. And you need to give this to your new employer. The other thing is, depending on what province you're in, you will also need to do a provincial TD1. So there's both federal and also provincial tax in Canada. So you will need to do a TD1 for both the federal side and also the provincial side. Now, the very good news for everyone that works in Canada is you can earn the first $14,398 tax-free. So that means that, you know, if you're working a couple of hours a week in Starbucks, or if you don't work during the semester, but you maybe do 6 or 8 weeks of employment during the summer, and you earn, for instance, $10,000 or $11,000, the good news is you'll be underneath the threshold, so you shouldn't have to file tax. Or sorry, I beg your pardon, correct myself. You shouldn't have to pay tax on it. But I will also say, just because you shouldn't doesn't always mean that your employer will tax you correctly. So again, we would see lots of circumstances where, you know, pre-employment tax forms were not done correctly, or pre-employment onboarding forms were not done correctly, and all of a sudden somebody starts getting 10% or maybe a higher amount taken from their weekly or bi-weekly paycheck. So again, the TD form is to try and make sure you get off on the right footing, that you say to your employer, hey, you know, this is my first job in Canada. It's my first job of the year. Can you please make sure that I get my basic personal amount, or it's called the BPA? And please don't start hitting me with Canadian tax until I earn more than $14,398. Now, the other thing that we would say is very, very important is every time you start with a new employer, it's important to fill out a TD1, because what could happen is an employer might assume, for instance, if you started a job in maybe January or February, they might assume that you haven't already gotten your basic tax-free allowance. So they will give you your first $14,000 tax-free. And if, for instance, you're working during the semester and you work, you know, 10 or 15 hours a week between maybe January all the way through up to May, you're probably going to be hitting that, you know, 14,000 threshold. And then if you decide that you're going to work somewhere else during the summer, they might know that you've already earned 14,000 or maybe even 15,000 during the year. And if you don't fill out the TD1 and give it to your new employer, they might start you on day one with a new tax-free allowance of an additional 14,000. And that's going to make the Canadian Revenue Authority upset, because in effect, you're claiming the allowance twice. And what will also happen then at the end of the tax year is you'll end up getting a large tax bill, because you can only claim the basic personal amount once. You should only be given it once. And if you had 2 different employers, both give you that amount tax-free, then the Canadian Tax Authority is going to say, you've claimed this twice, you should only be claiming it once. We need to get our tax dollars back, because for every dollar that you earn over the 14,398, you should be paying tax to the Canadian Revenue Authority. So I would say it's very, very important to make sure that you fill out the TD1, make sure that you've done it correctly, and make sure that you do it for every time you start a new job. So as I said, even if you didn't work last year, or even if you only arrived in Canada over the last 2 or 3 months, but you're planning on working this coming summer, make sure that, you know, if you're working now, or if you're starting a second job during the summer, make sure you fill out a TD1 for each employer. And probably move on. Now, this is probably the question that we get asked all the time about a resident or non-resident in Canada. And I suppose when we think about residency, you know, in a lot of cases we think, well, where do I live? And maybe that's where you might feel that you're a resident, and, you know, you're paying rent, and, you know, you've got bills. But on the tax side, things tend to get a little bit different. And every country will have slightly different rules about how they decide whether somebody is a resident or a non-resident for tax purposes. The one thing I will say about Canada, and I'm not just saying this because I'm chatting to Han and Devant, but Canada is a super, super beautiful but friendly place. And Canada have long established kind of pathways towards permanent residence. And I will say is probably either maybe one of the more progressive or maybe just one of the more friendly countries in the planet in terms of giving somebody the opportunity to stay there, longer. But equally, for the Canadian Revenue Authority, they do need to put in place certain rules to figure out, well, is somebody a non-resident for tax purposes, or are they a resident? And again, there's a difference between the tax side and and where you feel yourself that you're a resident, or where your passport says that you're a resident of. So for instance, Hannah alluded to it. I spent a summer living in Toronto. I actually lived in the University of Toronto, on the University of Toronto campus. I worked for the Toronto Star newspaper. I also had a second job in the afternoons, which meant that I had to complete 2 TD1s because I didn't want to get 2 different tax-free allowances. But because I lived there for 3 months, I was a resident of Canada for those 3 months, but I certainly hadn't been there long enough to become a resident for tax purposes. So as a very general rule, the Canadian Revenue Authority would say, well, you're here in Canada for the purposes of education. If you're doing an undergraduate program, that might be taking you 3 years, it might be taking you 4 years. If you're doing a postgraduate program, that might be taking you, maybe a year, possibly 3 or 4 if you're doing a doctorate. But the primary purpose of your stay in Canada is for your education and for the purposes of your studies. So this is where we start to get into a gray area, and I have to be careful with my language. And this is where every single circumstance is going to be slightly different based on you and your personal circumstances. But in general, the Canadian Authority will look at the length of time that you've been in Canada. So while 4 years might sound like a long time, if you're there for the purposes of your education, you might have it in your head that, I've left Ireland, I'm going to go and I'm going to study in the University of Toronto, I'm going to get my undergrad degree, and then I'm going to go travel the world. I'm going to go to Australia. Maybe I'm going to go back to Ireland. But I know that for the next 4 years, I'm going to be living and studying in Canada. But because you're not intending to stay there permanently, the Canadian Revenue Authority would say, well, even though you're living here, most of the year, or maybe completely year round for 4 years, you're still a non-resident for tax purposes because your primary purpose is here to study. Where it starts to get a little bit different is, perhaps if somebody was an older student, and again, I'll take my own example. If I had left Ireland, decided to study at the University of Toronto, if I had brought my partner and kids and the pet, and if we had rented out our house back in Ireland, and if we had started buying a house in Toronto so that we could have somewhere to stay when I was studying, all of a sudden, that's a little bit different and more of a commitment to Canada than somebody who knows that they're only studying there for 4 years and is likely going to head off somewhere else. So the Canadian Authority, again, they would look at your residential ties in Canada. In those hypothetical circumstances, I've moved my family from, my original home country, and it looks like we're now establishing ties and establishing more of a permanent presence in Canada. And in those cases, the Canadian Revenue Authority might say, well, Enda told us that he was only here for the purposes of his study, but he's after buying a house. He's got his wife and he's got his kids here, and he's got a whole load of other circumstances that really make it look like he's going to be living in Canada for quite a long time. So in those cases, it could be the case that somebody might argue, well, even though I'm still studying, I feel like I'm going to be in Canada for a long time. And when I graduate, I intend to get a job in Toronto or somewhere else in Canada, and I intend to stay here for a long time. So that's where we do need to kind of fine tune based on the individual circumstances. The other thing that will come into play here is, every country will have slightly different rules in terms of how they define their own residence for tax purposes. So it could be the case that you're from a country that says, even though you might be studying abroad, the last time you were, permanently living in one location was Ireland or was Singapore or was Korea. And even though you're temporarily absent from Korea or temporarily absent from Singapore for the purposes of your study, you're only there for the purposes of your study. You're not intending to permanently leave Singapore. You're intending to come back to Singapore or China or Korea after your studies. So that country might say, we would still consider you to be a tax resident of your home country, even though you are studying in Canada. And again, you can only be a tax resident of one country at a time. You can't straddle two different countries from a tax perspective. So the Canadian authorities would also then look at, what significant ties you might have outside of Canada. And this again is where, if I was studying, but all of my family were back in Ireland, my full intention was to go back to Ireland at the end of my studies. Again, that just reinforces the position that, international students, again, are typically considered to be non-residents for tax purposes. I know I've gone into that in a little bit of detail, but I think it's quite an important one because it's kind of the foundation for understanding and making sure that you tax yourself correctly. Do you want to move on, Han? I suppose as a tax person, who should file and why? I would always begin this with the answer is, well, it's the right thing to do. Unfortunately, no matter what, I can safely say, no matter what country on the planet you're from, nobody can really, truly avoid tax. Even if there might not be certain income taxes, there might be some sort of a sales tax, there might be a property tax, there could be a capital gains tax. So unfortunately, in the big bad world, we all have to pay tax and we can't avoid it. I would say as a good corporate citizen and a good moral citizen, it's always the right thing to do to file your taxes, because you always want to make sure that you pay the appropriate amount of tax, that you don't have anything owed, but also that you don't leave anything with the tax authority that should actually be sitting in your bank account. I suppose in particular rules for the international students, the only way that you know that your tax position is balanced with the Canadian Revenue Authority is if you do a tax return. And again, it's not just on the Canadian side, but every country across the planet would like, their government would like to know, if you're a resident of that country, they would like to know how much did you earn in this country and have you paid the correct amount of tax. And again, while a lot of the time the tax is going to be withheld at source, so again, your employer here in Canada might withhold, the 10% after you've earned the 14,398. But for instance, if you were trading crypto, or if you had some freelance work, or if you had some other prizes or awards or other type of income that wasn't reported in a regular tax document, doing your tax return at the end of the year is your opportunity to say to the CRA, hey, you guys know about the job I had, you know that I earned $20,000, you know that I paid $700 of tax on it, but you don't know about these crypto gains that I have. You also don't know about some of these, this other income. So in my tax return, I want to tell you about all of the income so that I can make sure I'm paying the correct amount of tax. But the other thing that we're doing when we're doing our tax return is saying, well, while you don't know about some of this income, you also don't know about some of these additional expenses that I paid. So maybe they don't know about some of the tuition that you've paid. Maybe they don't know about some medical expenses that you've paid. And doing your tax return is your opportunity to balance the books with the Canadian Revenue Authority. Their number one objective is to make sure that everyone pays the right amount of tax. If you've paid too much tax, the Canadian Revenue Authority are lovely people. They will happily give you a tax refund to get you back to the balance of tax that you should have paid, the correct amount. And equally, if you owe tax, if you haven't paid the right amount during the year, the Canadian Revenue Authority will say, hey, and we know that you paid tax on this amount of income, but we also know now that you had all of these other income types. You didn't pay your tax dollars on this, and now's the time that you need to please pay them. From a practical point of view, the deadline is coming up in a little bit over a month. So it's usually the 30th of April. So you might hear a lot of your Canadian friends saying tax day is always the 30th of April. I think that falls on a Sunday this year. So they've given us an extra day. So it's the 1st of May. I actually think maybe last year it could have been the 2nd or 3rd, just the way the weekends fall. So I would say, the fact that I think we'd maybe more than 100 people register for Day A. You guys are obviously thinking about tax. I would say at the end of this session, try and start to gather all of your documents. We'd love to help you on Sprintax. So if you get a chance, log in and just start to do it. Because the other thing I would say, the quicker you get your tax return into the CRA and also into the provincial office, the quicker they can start processing it. And if you're due a refund, it means that that money is going to be sitting in your bank account sooner rather than later. The other thing that I would say in terms of the importance of filing a tax return, if your circumstances change and in a few years' time you decide that you might want to stay in Canada, or in a few years' time you've maybe graduated, you've worked in the US for a while, you've worked in Australia, you've gone back to your home country, and then you decide, you know what, I loved Canada, I want to come back, maybe as part of their international worker program or something like that. The fact that you've got a good, clean tax record is going to be a massive help. What you don't want to happen is you want to, you don't want in 2 years' time or 5 years' time to be doing an application for a visa and somebody says, hey, I recognize this name, Enda Kelleher. I recognize this tax ID number. It says that you're in the US, in Canada for 4 years, but you know what? We didn't get any tax returns for this person. So they might be less likely to give you a new visa if you didn't do your tax returns when you were maybe studying in Canada. So coming back to my first point about being, a good global citizen, we have found that not doing a tax return can really, really come back badly to bite somebody. One example that we had, particularly maybe in the US market, is where people hadn't filed tax returns. Then the US government started making stimulus payments to individuals that had left the US who had maybe filed incorrectly or had not filed at all. And then they had to correct all of those before they could come back into the US. So similar in the Canadian side, please, please, please make sure that you do your tax return for every year that you're in Canada. Do it correctly, because even if you don't know today that you'll end up working in Canada in 5 years, 10 years, maybe even 15 years, what you certainly don't want to happen is, when that point in time comes and you look to do your visa application, there's going to be, you don't want anything blocking you from getting back into Canada at that later stage. And then it's amazing the amount we, I'm an international student, surely they shouldn't be giving me a refund. The good news is the Canadian Revenue Authority doesn't discriminate. If anyone pays too much tax, they will happily give them a refund. The other thing is they will actually go back a number of years. So for instance, if if during COVID you didn't get a chance or you're too stressed to file, the good news is you can actually catch up on any years that you've missed. And I would also say that's a very good idea, because what you want to make sure is that you have a good, clean history with the Canadian Revenue Authority. The other reason that is maybe a little bit more unique to Canada is if you have paid tuition in Canada and you haven't earned in that particular tax year, you can actually carry forward a tax credit based on some of that tuition that you've paid. So I'll give you a quick example. If you didn't earn any income in Canada in 2020, but you might just mute you for a sec if you get a chance. If you earned in 2020, or sorry, I beg your pardon, if you didn't earn, sorry, Steve, if you get a chance, would you mind muting, please? There's a little bit of background noise coming through. Thanks. Han, I'm not sure if you can mute Steve, maybe on your side.
Let's see if I'd have to get out of the slideshow.
Sorry. Apologies for this. I'm getting quite a bit of feedback on my side.
I just muted him.
Apologies, I'll go back. So if you didn't earn in 2022, but for instance, you had paid $10,000 in tuition, by filing a Canadian tax return for tax year 2022, you'll actually be able to generate a tax credit that you can use on your 2023 earnings, which will help offset any amount of Canadian tax that you do need to pay in tax year 2023. So again, even if you didn't earn, that's a very, very good reason for still filing a tax return. Do you want to move on, Han? So I've actually jumped a tiny bit ahead of myself. So I've covered the first piece. So again, if you didn't earn, it's still a very, very good idea to file. In terms of getting ready to prepare your tax return, so you will need your entry and exit dates for the current tax year, because What we will need to figure out is, how long did you spend in Canada? We will then have to start to look at some of the types of ties that you will have to Canada, so we can figure out, are you in fact a resident or a non-resident? Again, as a broad rule, non-residents, or sorry, I beg your pardon, students are generally considered to be non-residents from a tax perspective, but we will still ask you all of the relevant questions. Then again, same as any country across the planet, you need to gather all of your income documents. So it could be a combination of pay slips, it could be a combination of a TD4 that you might get from your employer. Sometimes there's another form called a T4A, which will be some of the additional payments that maybe could be like social security payments that your employer has made on your behalf, or it could be other benefits that your employer has paid that were made to you. If there's any expenses that you've gone through or that you've incurred during the tax year, again, this is your opportunity to balance the books with the CRA. So for instance, things like your tuition, you might be getting a T2022 from your university, which will confirm the amount of tuition that you had paid and what might be eligible for a credit there. There's certain types of medical expenses, and again, you would need proof of all those receipts and what you've incurred on the medical side. And then those could also be added as part of your tax return. And then obviously the most important identifier is going to be your social insurance number. Speaking of your social insurance number, a very quick rule of thumb in terms of figuring out are you a resident or non-resident is, if your social security number begins with a 9, it means that the Canadian Revenue Authority have issued you, in effect, a temporary social insurance number, which means that they would consider you to be a non-resident from a tax perspective. Now, it doesn't automatically mean that if your number does not begin with a 9 that you're a resident. We would still need to look at all of your unique circumstances, your ties to Canada, etc. But that's just a quick cheat sheet. If your number begins with a 9, you're definitely a non-resident. As I mentioned, most of our experience would be that international students are non-residents anyway. Then obviously you can. I would love it if you all came to us. We've been working with Devant, so we've arranged a small discount for anyone that would like to come through and have us help them. We've got a system where you can log into Sprintax Canada. We will ask you to fill in your profile details, to upload your income documents. We will ask you about any expenses that you've done, and then we will prepare your federal, and if you need to do a provincial one, we'll prepare your provincial tax return as well. And then we will give you a pack with instructions. We've also got folks like Steve in the background that will help you on certain pages. So if you're going through the tax questionnaire and something's a little bit complicated or you're not sure of it, we've actually got a live chat function that you can use that will help you get through it.
And the good thing is there's a discount.
There is also a discount. Yeah, there is going to be a discount. I think I'm even going to see if I can change that to a $10 discount rather than a $5 discount. But the code is still correct.
Fantastic. So
yeah.
I would encourage every registrant, if you're looking to file tax, just to use that wonderful discount when you check out. Lots of questions on the chat, and I know that Steve's been very busy answering the questions in the Q&A section. But perhaps, and if I can ask you a few questions, maybe the common questions, if you don't mind, and we can go through some of them. Maybe we'll answer some of the general questions that people might have in the chat as well as the Q&A. First question, I guess we answered that one, is a resident and non-resident. The second was, how do I claim a tuition tax credit?
Yep, great question. Very, very common. So there's a form that's issued called a T2022, which basically says, my name is Enda, I studied at University of Toronto and I paid $15,000 in tuition fees. So when you're preparing your Canadian tax return, you will submit the 2022, and that is proof to the Canadian Revenue Authority that you did in fact pay that dollar sum to the university. there has to be a proper legal process to make sure that it's, you know, a valid third level institution, it's a valid course, it's a valid higher education piece. There's certain T's and C's. You know, you can't just pay $20,000 to do a 3-week course and get a massive tuition credit on it. So again, all of the big universities, in fact, pretty much every university across Canada that is accredited, this is a very, very simple form. It's given to non-residents as well as residents, and it's just included as part of your tax return, proof that you paid those fees. And it's then based on that the Canadian Revenue Authority will be able to give you the credit in the following year.
Okay, so students look out for your T2202.
Yeah.
Perfect. What if a student received a scholarship award or a scholarship and award from their school? Do they need to include that in their tax return?
So the great news is most of those would tend not to be taxable. And again, I'll say as a broad brush, they're not going to be taxable. There's certain wacky ones that we've seen in the past where, you know, something was called a scholarship, but really, if you looked at it from the outside, that was just somebody trying to pay somebody money. They called it scholarship, but it wasn't really a scholarship. So we've seen things like maybe where somebody was given a car allowance or a parking allowance, and really they're just trying to give them cash. But in most circumstances, what we would see is somebody is given an amount that is going towards their tuition. You know, instead of me paying $20,000 to University of Toronto, I might get a scholarship of, you know, 15,000 or 20,000. So the good news is those scholarships are not going to be taxable.
Great news. What if I didn't work in Canada? Do I still need to file?
So yeah, great question. This is where it also gets a little bit complicated, and it will depend on where you're from, because just because you didn't work in Canada doesn't necessarily mean you don't need to do a tax return, because you might still need to do a tax return in your home country. And for instance, we would see that sometimes because if people don't file a tax return in their home country, they might lose some of their local home country social security benefits. However, one of the reasons that we would strongly recommend people who've been in Canada who didn't have any income that they still should file is if they have paid tuition in Canada, even though they didn't have any income that year. If they paid tuition, they'll be able to get that as a credit in their income for the following year. So like the example I gave, if somebody was in, I keep picking University of Toronto, maybe I should say UBC or McGill or somewhere else, Macquarie or somewhere like that. But if someone again paid 20 grand of tuition last year, but is hoping to work at some stage this year, or even in a couple of years' time, I would absolutely recommend that they do a tax return, because it won't cost much. It won't even take too long, but it could be very, very valuable in terms of giving you thousands of dollars tax-free next year, or, you know, in a year's time when you actually do start earning.
Mm-hmm. So it's a good investment to do your taxes
now. 100%.
And one of the
and if you were to estimate how long it takes, how many minutes it takes to do your tax return versus the dollar value of getting that tuition credit, it's probably some of the highest wages you'll ever get in your life. Well, hopefully not, but it'd be very worthwhile.
Very interesting.
Like one hour of work could be worth thousands of dollars, put it that way.
Good to keep that in perspective, for sure. There was a question in the chat function. How much is it to file with through Sprintax?
I think it'll be $59 for your customers.
Great. That's a great fee. What if they going back to the working in Canada, what if they worked and they were self-employed, they were freelancer while studying? Can I use, I guess the question is, can I use tuition credits?
Yeah, so again, the good news is the Canadian Revenue Authority, they don't discriminate too much. You do need to be a little bit careful to make sure, you know, your freelance work doesn't breach any of the terms and conditions of your visa in terms of the type of work that you do and the number of hours that you're doing. So out of a quick note of caution there. But again, the basic excuse me, the basic personal allowance of $14,398 is there for everyone. So if your freelance work is under that, you shouldn't have to pay. You should still be reporting the income, but you shouldn't have to pay any tax on it. if your freelance work goes over that, that's where you actually do need to start paying tax. It's also another good reason for doing you're filing your tuition credit for a previous year, because if you think that you might be doing freelance work this year or maybe next year, it'd be a good option to try and build up that credit, so it might reduce any tax bill that you do have coming up.
Okay, that's good to know. What if a lot of the students, they may not be working, but they receive financial supports from their family abroad? Do they need to include that in their return? Do they need to state that?
No. So what I would say is, if you're receiving support from home, make sure you WhatsApp them or Facebook or Instagram and say thank you very much, and ring them and say thanks, keep sending me the money. But from a tax perspective, the Canadian Revenue Authority are only interested in income, and they're only interested in really income that is earned in Canada. And if you think of it, if my mum or dad or a cousin or an aunt or a friend in Ireland is sending me money, it's not income. It's a gift. It's a present. That's when it starts getting a little bit messy in terms of gift tax or maybe inheritance taxes or lifetime gifts. But most of those are more of a concern from the home country tax position and what you might be getting from parents, siblings, friends, etc. But the good news is, if you've got 3 or 4, for instance, family members back in Korea, Ireland, Australia, whatever, and each of them send you a couple of $1,000s per semester, keep sending them the nice pictures of your studies, and tell them to keep sending the money. But the good news is, you shouldn't be paying tax on it.
Oh, that's very good to know. Mom and dad, just keep on bringing.
Absolutely. Bank of mom and dad, good investment.
There's a filing electronically and paper-wise, but can I file electronically if I'm a non-resident?
You can actually, yeah. The Canadian Revenue Authority introduced it a few years back, so you can file electronically, yeah.
Okay, that's good, great. It's much simpler, I guess. What if I missed the deadline, April 30th, or in this case, May 1st, deadline for filing my taxes? What happens?
So I'll answer that in 2 parts. So if you need to pay money to the Canadian Revenue Authority and you miss the deadline, they will start to say, hey, you owe us money, you didn't pay us on time, please pay us immediately, but because you didn't pay us on time, we're going to penalize you. So they will start to hit you with some, I think it's maybe a 5%, somewhere around 5% penalty of the amount that you owe. So if you owe the CRA $1,000, they'll charge you $50 in a penalty. I'd rather the $50 in my pocket than in theirs, so you should just be paying on time. It's not a huge amount, but over time, that penalty does actually increase on a monthly basis, and it can start to get to quite a large sum. So I would say, if you owe, do your taxes on time, especially if you owe the CRA money. If on the other hand, you're due a refund, well, the good news is there's no penalty for filing your taxes late if you're due a refund. But if you think about it, you're not going to get that refund into your bank account until you do the tax return. So the later you file your tax return, the later that money is going to be sitting in your bank account. So again, we've got a month to go. We've got a month and three or 4 days. I would say the fact that you guys are all on this session now means you're already thinking about it. Try and get it done over the next couple of weeks. You probably have most of the documents that you need sitting in an email somewhere from your employer or from your university. So I'd say just try and get it done. And certainly if you think that there's a chance that you might owe money, please just get it paid sooner. As long as you pay it on time, there aren't going to be any penalties, and the penalties are completely avoidable. So better off keep that money in your pocket than someone else's.
Absolutely. File your taxes on time for sure. What if the student is paying rent? Can they put their rental costs in their claim for the student?
No,
the tax return?
Typically they can't. No, like we've seen some creative stuff where people have actually been renting a building and then renting out other rooms, to try and cover, and that starts to get interesting, because if somebody is actually earning money, if I rent a house for $5,000 and then I sublease 3 rooms for $2,000 each, I'm actually generating $1,000 of income, and the CRA will say, hey, we want our tax dollars on that. but there's no offset on your tuition or your tax bill just because you have to pay rent in Canada, unfortunately.
So, okay, good to know that rent is can't be claimed. Okay. Can I transfer tuition fee paid in Canada? I guess this question is more of transfer tuition paid in Canada, I guess, in their home country or within the next year?
Yeah, that's actually a great question, and it's it can get a little bit complicated. So, for instance, we talked earlier about the T2022A. I have seen some circumstances where, if any of the folks on this are from the US, I have seen circumstances where whoever paid your tuition in Canada can use it on the US tax return. And certainly, for instance, if you were in Canada and, coming back to your question about a gift, if you had a relative in Canada who's maybe helping you out with some of your tuition or helping you out with some of your rent or just your general living expenses, you can actually transfer that tuition credit over to that individual. So again, great question, Han, because it comes back to the value and literally the dollar value and the importance of doing your tax return. Because if you do have a relative in Canada, and you can give them that tuition tax credit, that could have a very significant impact on their tax return, and maybe increase a refund that they're going to get. Maybe they might buy a nice dinner if you do it as well.
Now, when you say relative, what is the separation? Is my mother, my father, or is it my 3 cousins down the line?
Yeah, very good question. It's definitely it's parents. I think possibly grandparents are in line as well. When you get down to the 2nd and 3rd cousins, no. not an option. No.
Okay, good to know. So because a lot of our students here are international students, if they earn wages in Canada, does that affect their income tax back home in their home country?
So again, a great question. I'll try and give you as simple an answer as possible, but there's 150 countries across the planet or roughly 150 that Canada has a tax treaty with, and each of those will be tiny bit different. So what most of them will say is, if you've earned in Canada, you're probably going to have to do a Canadian tax return. For instance, when I lived in Canada, I did have to do a Canadian tax return, but I think I had to declare in my Irish tax return that I earned in Canada, but I didn't have to pay tax a second time. So it'll depend on the country that you're from. So again, for Americans, no matter where they are on the planet, if they earn money in Ireland, Canada, somewhere else, they will have to declare it on their US tax return. So, but there's a difference between declaring it and having to pay tax on it. Because what could happen is, for instance, you might say, well, I earned $20,000 in Canada, I paid $2,000 in taxes. You might need to include that in your home country tax return. But the fact that you've already paid tax on it means that you don't need to pay it a second time in your home country. Now, that said, a lot of the time for the international students, if you're studying in Canada for 3 or 4 years, if you're earning in Canada, students would tend not to file a tax return in their home country. Typically they might be underneath the threshold that requires filing in their home country because they wouldn't have had a second job. We've seen slightly not unusual, but maybe circumstances where somebody's studying in Canada, but maybe goes home for the summer and takes a summer job at home. And in that case earns, 20,000 euros over 3 or 4 months back in their home country. Well, in that case, they might have to do a home country tax return. But in general, if you're living, working all in Canada, you probably won't need to have to do one in your home country. And just so people don't get spooked or scared, even if you do need to do a tax return in your home country and declare your Canadian income, because you've already paid tax on it in Canada, you won't have to pay tax a second time in your home country. That's the beauty of the way these tax treaties work. They don't want to penalize people.
And I guess vice versa, when you were giving the example of if a student went home in the summertime, worked somewhere in Europe and earned $20,000, when they file their income tax here in Canada, they must declare, but they won't get taxed on it. Is that correct?
Yeah, yeah, you could actually give this session, and your tax knowledge is pretty good. So the Canadian Revenue Authority will uh, the Canadian Revenue Authority will say, please tell us about all of your worldwide income. But again, if you've earned in Ireland and you've paid tax, you will get an opportunity to say that. So they're not going to tax you on it again. But you also raise a very good point, because coming back to our first slide about the T1 and this $14,398, as I said at the start, Canada is a lovely, very friendly country. They will give this allowance to everyone. But what they will say is, if for tax year 2022, 90% of your income was outside of Canada, well, then we're actually not going to give you this $14,000. So this is, for somebody that spent all of the year in Canada, it's unlikely. It's likely that most of their wages were going to be earned in Canada. But we have seen some circumstances. Maybe somebody only started university in September or October. Maybe they were in their home country from January through to September. Maybe they did have a job in their home country, and maybe they only then got a part-time job in Canada, and maybe they only started in November, December. So in those circumstances, it could be that if you look at the totality of their wages between what they earned in their home country and the 6 or 8 weeks of part-time work in Canada, it could be that 90% of their global income was actually outside. So in those circumstances, the person probably shouldn't be claiming that that basic personal allowance of 14,000, because the Canadian government will say, hey, we normally give this to people, to help them out so that they're not taxed on their first dollar. But in your case, you might have earned $15,000 outside of Canada. You only earned $1,000 here. So we're actually going to tax you on that $1,000.
Interesting. Wow.
Yeah,
all the different
that's a little quirk. Yeah. Yeah.
Wow. Some of our students might have dabbled in investments in stocks and crypto. How does that affect, I guess, their gains affect their income taxes?
Yeah, so a bit like everything, the Canadian Revenue Authority, they don't want you doing anything illegal, but as long as there's money involved, as long as you generated some income from it, they want to get their tax dollars out of it. So whether it's trading stocks or whether it's trading crypto, the Canadian Revenue Authority will want to know, did you make a gain on that? And then based on the gain, they will say, well, we want to get some tax dollars on it. So the good news is, and Canada is a little bit different. If you make a gain, they will kind of give you the first 50% tax-free, if you like, and then you'll be taxed on the second half of the gain. And it's amazing. We've seen a huge increase in the last number of years, particularly with international students that might have, a Robinhood account or an eToro or an E-Trade account or some sort of virtual exchange. And then particularly the last couple of years on the crypto side, a lot of folks have been hopefully trading rather than mining. But the CRA will look to see, well, based on all that activity, did you actually make a gain during the year? So, if you're trading frequently, you might be up this week, you could be down next week. The Canadian government will look at that over the full period of 12 months. And, if overall you're down, well, then, you're down, so you didn't generate any income, so there's no tax event. But if you generated, say you were up $1,000, they will say, okay, the first 500 you get tax-free, but we want to get our graduated tax rate on the next 500. And one of the things we came to in one of the other slides is, they want to know about all of your income. So if you had wages over here that might have been reported on one of your regular documents, and then you had, some freelance work and some crypto, the CRA will throw all of that into the one pot to figure out, well, what are the total tax dollars that you should be paying. So it'll start at around 10%, but if your effective tax rate is, it'll go up as high as 37%. So it could be that you end up paying 20, 25, 30% on some of those other types of income, depending on what your total level of income is at for the year.
So when in doubt, always make sure you claim your gains.
Yeah, absolutely. And, the trading platforms have become very, very good the last number of years at giving you annual summaries and statements of your different positions to show your overall gain or your overall loss during the year. So they know that there's serious tax implications on all of this, so they're making it a little bit easier on the reporting side.
One of the students asked in the chat, the tax-free savings account, if they withdraw from their account, are TFSA withdrawals and contributions taxed for international students?
I'm gonna have to double check and come back to you on that one. I think that there could be almost like a penalty if you do an early withdrawal and there is a tax on it, but I think otherwise non-residents are eligible for it. But I might double check that and come back, unless Steve, you happen to know and you can pop it into the chat.
And then Steve did say the audience members could contact your customer service rep, and they can help with the particular tax questions.
Yeah, what we recommend to a lot of folks is, if you could start the process, add your documents, fill out your profile. Some of the questions might be answered as you're entering in those, your tax details, your tax forms. Then we've got a live chat team ready to help you as well.
Absolutely. Somebody did ask about unstable internet connection. Sorry. Everyone will be getting a recording of the session after this, so no worries if you missed the beginning or middle due to internet connections. There is another question about how long does it usually take to get the tax return once they file with Sprintax?
Good question. It's it'll also depend on how early in the filing season they file. So like we've had folks that were filing over the last number of weeks, and I would anticipate they'll probably get an answer from the CRA within the next number of weeks. If you leave it to closer to the deadline around the 2nd of May, I think it's going to be middle or end of June, maybe even into July before you get a resolution. So again, file early. If you're due a refund, it's going to be in your bank account sooner rather than later.
Right. We do have one last question in the Q&A section. Leanna asked, do we pay taxes directly to CRA after filing as a self-employed? Will CRA give us directions to make the payments? I guess
yes. The good news is, and it's not just the CRA, for any tax authority across the planet, if you owe them money, they're happy to receive your money. So typically when you owe them money as part of the pack that you'll provide them with, you'll have your nice, neat, tidy tax return, and then you'll also have a payment voucher. And sometimes you might have an option to put your debit card, your bank account information on it. Sometimes you might want to say, I'm going to pay by bank draft or by check, and then you would include that in what you submit to the CRA. So yeah, it's pretty easy to pay them, I think is the answer.
Yes, they'll, like you said, they're happy to receive payment.
Happy to take your money, yeah.
We had such a full session with so many questions. Now, if they wanted to follow up with Sprintax, is there any particular site or place that they can?
If you go to Sprintax.ca, so again, the link, and I'd say ideally use the Devant link, and I think maybe the team might be sending out that link in terms of the follow-up for this. So I would say, start in Sprintax. We've lots of supports within the system, and we've tried to make it as user-friendly as possible, and work your way through there. And then we've also got our live chat team on the Sprintax.ca site that can answer your questions while you're actually uploading your documents, while you're typing in the information. So hopefully that'll help any folks that need additional support.
Fantastic. We'll be sending that out to everyone for sure. Thank you so much. We've got 2 minutes left, and that was a jam-packed session. And thank you so much for your knowledge in this. It's quite complex, but you really made it simple and simplified it for the audience. And this is a great useful resource for them. And we will send out that link, as well as make sure everyone to use that code to get your 5% or $5, sorry, discount. Thank you for your time, and Steve in the background as well too.
Thanks a million, Hannah. Hope everyone found it useful.
Thank you so much. And just before we leave, I do have a poll for everyone, just a quick poll. It's a mini poll. Can you please just answer this question? How would you rate this webinar? That would be really, really helpful for us to make future sessions. Please take a second to do that. And while you do that, thank you, everyone. Have a great evening, and we'll see you next time.